How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on Euro versus US dollar. As we can see here on Tuesday, price comes up and takes out the previous daily high. So price is still trending bullish. We've anticipated that from the beginning of the month, saying that the seasonal tendencies for Euro should be bullish for March and the DXY should be bearish. And we're seeing that already with a lot of correlated and inversely correlated pairs. So far, we are still waiting for a higher swing low. So for those that I tell or have less confidence in finding the trend, I tell you to follow the bullish trend formula, which is meaning a swing high is broken, which is right here, February 29th. That was a swing high that was broken here on March 4th. After that, we would wait for a higher swing low to form. So that's for those that need more confirmation and more confidence. For those that are aggressive and for those that are looking for day trades, you can still be looking to be long if you have the sentiment of a higher EU for the month of March. If you notice or you find conviction that the market is trending, you can go intraday as a day trader and look for long positions into buy side liquidity or towards swing highs or previous daily highs. If you take a look on the lower time frame, we had a very simple London model entry technique that I like to look at. So let's take a look at that together. So we're going to go back to just before London session. And what we're going to be looking at is the dead zone from midnight to 2 a.m. That's going to be our Asian lunch. So from midnight, New York Eastern Standard Time, to 2 a.m., we're going to be looking for all the buy side liquidity pools above the 15-minute swing highs and all the sell side liquidity pools below the 15-minute swing lows. So we have one here. This is going to be a sell side liquidity pool. We have a buy side liquidity pool up here above that swing high. And we also have the London opening price. So European open 2 a.m. is where I like to start my kill zone. So that's 2 a.m. opening price. So anytime price is below it, it's overbought. Anytime price is above it, it's vice versa. Anytime price is below it, it is oversold. Anytime price is above it, it's overbought. And it's most ideal to find buying conditions below the 2 a.m. opening price. It's most ideal to find selling conditions above the 2 a.m. opening price. Very simple concept. Buy low, sell high. Now, you can't just go into this market just assuming you should just buy as soon as it drops below 2 a.m. or sell as soon as it gets above 2 a.m. You need context. The context is from the higher time frame via daily, from what I'm showing. You may be looking at this from the 4-hour, the weekly, the 1 hour, etc. But from the daily, I know the market is bullish. Structure is being broken to the upside. Momentum is being broken to the upside. There's bullish momentum being coming in because a swing high is broken. That's how I like to define bullish momentum. Vice versa, to define bearish momentum, a swing low is broken. Since we have a swing high broken, there's bullish momentum in the market. Odds are the market is going to trend higher. There's a potential opportunity for us to find a long setup intraday. Here on Tuesday, an ideal trading day out of the week, right? We got Tuesday, Wednesday, Thursday. Mostly your ideal bulk range volume comes in midweek. Tuesday is one of those days. Play it forward. You can see sell side is rated here. We also see that a new 15-minute swing high is formed, so we mark that off. But notice here, sell side is ran. Retail traders are most likely doing what? Looking to chase price because they just see it going down. Whatever they do in the retail world or the retail community, their logic is probably to chase price. That's our simplest way to define those people. However, if you are informed, I know my community is definitely informed, we're not going to chase price. We're going to wait for something to happen. We need to see liquidation, and we can see sell side liquidity has been liquidated, right? All those sell stops have been knocked out once price hit that. Anybody that was long here has a protective stop loss below here. They just run that. So there is now a purge on sell side liquidity. If you want to see a revert back to buy side, since the biases were most likely trending in bullish momentum via daily. We go down to the 1 minute time frame. We're looking for an entry technique, preferably below 2 a.m. Ideally, the entry should be below 2 a.m. Sometimes the entry can be around 2 a.m. It can be. Even if it's a little above it, it can be. But ideally, the best condition buy, the best optimal trade condition for a long, it's got to be below 2 a.m. This is for people that are very nitpicky, right? And very specific in what they're looking for. They're trying to be the top of their craft, trying to increase their accuracy. We want to see a swing high broken, ran by a fair value gap. And we can see it happens right here. There goes your swing high formation. Zoom in. 1, 2, 3. That's a swing high that's broken with a fair value gap. We would look to go long inside this fair value gap. I generally look for a 1-to-1 scenario intraday, trading any of the kill zones, and I'm just looking for 15 pips to the upside. Minimally looking for 10. I'll scale out at 10. And if I could get 15 and more, that's just a cherry on top. So you can see those are our 15-minute swing highs, clean highs. Look at how it looks like on the 1 minute. When it's transcribed on the 1 minute, it looks like very equal highs. And we know the market likes to run equal highs. So let's play it forward. Price taps into it. And let's see how it trades out throughout the kill zone. Even drops back down below 2 a.m. again. Even runs short-term liquidity pools below these swing lows multiple times and then runs up higher. For those that is versed in Larry Williams' ideology and methodology, you'll notice that there are smash day candles here. That's an extra one for those that are really on top of their game and studying. So we can see how it went from sell side liquidity to buy side liquidity right here and the next one here. All between midnight to 2 a.m. That's the kill zone. 2 a.m. to 5 a.m., you have your whole opportunity to find a long. Remember, the context was that we were looking for a long EU going into March. And so far, it's been providing that. Going into the New York session, we also can see the same thing happens. We'll just play it forward. That's for you to do your homework. We had the PMI news come out. We had a raid on sell side liquidity again, and then price shoots up higher. If you go back to the 1 minute time frame, you can see that same entry that we had in London would not have been stopped out. But if you had a trailing stop, of course, I tell this all the time. If you trail your stop, odds are it's very high that you will get stopped out. PMI comes out right there. Price takes off to the upside and dollar drops, of course. So we can see what's happening on the marketplace. If we also take a look from another perspective, let's go down to the 15-minute time frame. You will see that we have our classic ICT AMD, accumulation, manipulation, distribution. So the best buy condition happened below the Asian session low. We had a very tight Asian session. We spoke about that last night during UJ. We were looking for the Asian session model, but UJ was consolidating. Most of the pairs last night was consolidating, which means that we would have an ideal London and New York setup. London gave a great setup to find the long. Buying below the Asian session low is most likely ideal. You can see price drops below midnight opening price. So that's 12 a.m. Notice how it's below it. All the entry techniques are happening below 12 a.m. for this day on the 5th. Let's say you did miss the long setup below Asian session low. You can place a buy stop at the Asian session high and look to place a stop loss below the low that currently formed in either London session or New York session and look to hold for higher prices. Hopefully this was insightful.